question really is what you deem as a sustainable pace of growth going forward in terms of revenue and profit.
This year, our guidance, we have revised from 3 to 5% to 3.5 to 5%. And we've had a good first half. Q1, we did a little better than expected. Q2 as well, we've done better than expected. So which has helped us revise the lower end of the guidance. And the discretionary spend has been under pressure in the past, but in Q2, we saw a good uptick in discretionary spend, not just in financial services, but across the board. And that's what helped us deliver a good set of numbers. We've delivered 1.6% sequential growth and 6.2% year-on-year growth on our overall numbers.
Can that discretionary spending on tech continue given expectations of a slowdown pretty much across the world? We have Europe in particular under a lot of pressure.
Yes, and that is precisely the reason why we are not extrapolating this improvement in discretionary spend to be something sustainable. We are being a little cautious. We want to see this over a slightly longer period of time before extrapolating this for the long term. As you know, there is geopolitics, there is still macroeconomic challenges in different parts of the world, and all of that tends to keep our customers a little bit cautious about their spending. So at this point in Q2, we saw a good uptick, not just in financial services, but across a number of sectors. And we're going to wait and watch, and we keep executing based on the demand that we're seeing from our clients.
How much confidence do you have in the U.S. economy? It is still pretty resilient, but there's also the risk of the U.S. election. How is that impacting the way companies look at tech spending in the coming quarters?
Honestly, I'm not seeing a major correlation between elections and the tech spend. I think tech spends are getting driven by the business priorities that every company has. And technology is a very, very key component for almost every business, for conducting their business, for their resilience, for their growth, innovation, for all the nice things. Technology plays a pivotal role. So I think these two, I see less correlation. And given there is a lot of interest in Gen AI and the art of the possible using Gen AI, and that's also driving a certain thinking, which is increasing the spend and the focus on these areas with our clients.
How about correlation between tech spending and Fed moves and central banks in particular? Here, we have expectations that the Fed may be a bit more cautious when it comes to cutting rates going forward. Might that impact the thinking of how companies spend on tech?
Yeah, I mean, it's. I think if you see the past cycles, I think. I mean, I've heard and I've seen the interest rate cycles moderating has kind of triggered some spending with clients, especially in banking, and I presume that will probably continue. And I think there are already signals that the interest rates, I mean, it's already gone down a little bit, and there is certain signals that it will go down further. So I presume at a high level, all of this should play into improving demand environment.
CVK, in terms of the sectors that might boost your growth going forward, which one might that be? Might that be telecom, media, tech companies?
Yeah, I think two broad segments. One is financial services. The second is what we call as TMT, which is telecom, media, and tech. So I think it's one combined vertical for us. And these two verticals look strong. And the life sciences and healthcare, especially payer and provider segment in the US, definitely there are lots of opportunities there. And across all other segments, there is a certain spend which is getting triggered because of Gen AI. Gen AI allows clients to modernize and retire their technical debts faster and in a more efficient manner. And there is certain spend which gets triggered around data and AI, because of Gen AI possibilities, and also a little bit more focus on cognitive infrastructure, whether it is cloud or on-premise. So I think these three areas is where I see customers increasing their focus and subsequently the spend as well.
And we know that AI accounts for the most of the tech spending made by companies. Some are suggesting that, $1 trillion in the coming years for the likes of Meta as well as Microsoft. What assumptions are you making about AI tech spending, and what are you seeing on the ground?
I think our focus is a lot in transforming the tech services that we deliver to our customers. We have a platform called AI Force, which is focused on bringing all the efficiency levers for IT and business services within an enterprise. So that's a very important focus area for us. The second is HCLTech Enterprise AI Foundry, which is focused on bringing data-led innovations. Data is in different shapes, forms, in different places. How do you bring them together, either getting the data to the LLM or make the language models access different data sources to get the right outcomes? So I think there is definitely streamlining the data layer is a big area. And the third one, as I called out, is the cognitive infrastructure.
You talked earlier about how you see no correlation between the U.S. election and tech spending. I'm just wondering if you see risks out of the U.S. election. Already today, we heard about how the U.S. is mulling capping AI chips from the likes of NVIDIA. What risks do you see from the U.S.?
I think it's a very broad topic. I would hesitate to comment on that.
Do you see the U.S. adopting policies which might impact players like you?
I don't think so. See, the technology is such a crucial component for every segment of enterprises, government, academies, all of them, and NGOs and SM, small and medium businesses. And the technology landscape is becoming more and more complex. So the need for specialized service providers who can help leverage the right technology solutions to meet the client's business requirements, I think that's a enduring need, and it has to be addressed. And service providers like us are in the center of addressing such opportunities. So I think it would continue, and there will be only increasing focus on these type of services as we move forward.
CVK, given the optimism, what are your growth plans? Are you planning to hire more? Because when it comes to attrition rate, we're looking at 12.9%. It is lower, but it's still quite high.
Yeah, I think instead of looking at the total hiring numbers, right now we are more focused on hiring specialized talent who have AI, machine learning, Gen AI capabilities, as well as a lot of commercial applications like SAP, S/4HANA. So it's those areas is where we are focused on in terms of hiring. So the absolute numbers may not be very high, but the type of skills that we hire will undergo some change. So I think our pyramid structure would change gradually to have more specialized skills. That's how this is going to evolve.